With Palantir's next quarterly release just a few weeks away, what is there to expect from PLTR's Q1 2021 numbers? In this video, I'll overview what a Palantir earnings beat could look like. The slide deck release and conference call, whenever management ends up doing it, are going to be huge. And I mean bigger than any demo day or announcement of a contract. For investors watching the stock every day, it can be a bit demoralizing to see supposed catalysts such as double click or a new contract only lead to a continued sell-off. But all investors will have their eyes on PLTR's Q1 report, and the results are sure to affect sentiment and subsequent buying and selling. And I think it's going to be spectacular. Let's go. In its time as a public company, Palantir has only had two earnings reports. The first, Q3 2020, on September 12th, and the stock doubled in the 2 weeks following as investors took in the numbers. The second, Q4 2020, on February 16th, driven by institutional investors misunderstanding stock-based compensation and, of course, the pressure from the share lockup, PLTR started to slide and corrected down more than 20% following the report. It's worth noting that past stock performance in the wake of quarterly beats or misses is a very poor indicator of future performance, given a whole host of variables that make investing and timing the market so difficult. That said, we do have some historical evidence that the stock reacted incredibly strongly to an earnings beat and correspondingly to more of a miss. With that out of the way, now why is PLTR's Q1 report so important? Well, I think it could, keyword could, be the beginning of a rally. Stop me if you've heard this before. Not from me though, I don't advise for short-term gambling. All I'm saying is that if the macro environment stabilizes and Palantir beats big, the stock may spike and cause something similar to what happened following Q3. So what could that look like? Well, how about some estimates from my end? I'll keep it simple. It's easy to get bogged down by the numbers and lose sight of what is important. In this video, revenue and operating income. I made estimates in my last quarterly preview. Here they are, and here's how they compare to the actual numbers. Pretty spot on. I bring that up to challenge myself to see if I can do just as well this Q1. So here's what I'm thinking for this quarter. Palantir generated $322 million in revenue in Q4 2020. In that quarter, stock-based compensation was $241.8 million plus other related expenses, generating a loss of $156.6 million. PLTR is expecting Q1 2021 year-over-year growth of 45%. So we have to look at Q1 2020, which was reported as $229.37 million. 45% growth takes this quarter's revenue figure up to roughly $332.5 million, which is actually roughly the same as their Q4 2020 figure. Now we know that Palantir is usually conservative on their estimates, so I have no problem boosting the growth rate up another 10% to 55%. So my revenue estimate is $355 million. This may sound like a bit of a stretch at first, but PLTR did quarter-over-quarter growth from Q3 to Q4 of 11%, and this would only be quarter-over-quarter growth of 10%, so I think it's pretty in line. And I'm not sure how much this will play into it, but I think there is likely to be a cascading effect coming from the first demo day. It could take a while longer to be realized, depending on accounting practices and if Palantir is really free trialing all clients. Regardless, remember that demo day took place in Q1, so I don't think it can be completely discounted from bringing in more revenue. And in the double click event, this is what Sankar said about it.
Our inaugural demo day back in January. That event brought exceptional interest in our platform from around the globe, but in particular incredible demand in the US where we just almost can't keep up.
So ultimately, I think Palantir will deliver a swift beat to the top line and catch analysts off guard. Next, let's turn to stock-based compensation. This is where I'm a little more bearish. I think it's not unreasonable to assume a stock-based compensation expense anywhere from $100 to $125 million, since stock-based compensation should be lower than Q4 2020 by a lot, probably in this quarter by half, as that line reverts to the mean and we see less and less of a drag from stock-based compensation until it's pretty much the same every quarter going forward. Now this is a big question mark, and any change one way or the other could be a big surprise either way. Personally, I do think Palantir will see another GAAP loss in Q1. It will be better and improved than Q4 2020, but I think they will report a GAAP EPS loss in Q1 2021. Moreover, this may seem strange coming from me, but I do not see profits coming in Q1 2021 without backing out stock-based compensation like in Q4 2020. I think it's unreasonable to expect profitability with a high degree of certainty. Sure, it could happen, and I'd be thrilled to be incorrect here, but I think it's unlikely, and I think we could see a gross profit in the ballpark of $265 million, and I'll estimate operating income at a conservative negative $85 million. But what's the good news here? What could send the stock higher and into an upward spiral, as I'll call it? First of all, strong guidance. I think Palantir could have a profitable year for the full year of 2021 if they put out achievable guidance alongside these strong revenue numbers. That could be enough to spur some serious buying. At the beginning of the year, in this case in Q1, any investor should be thinking about how the rest of the year will take shape. For Palantir, as revenues continue to grow and stock-based compensation drops quarterly, I think there is a possibility Palantir pulls out a profit for the full year, but again, we'll have to see what their guidance is. So if the stock is to jump, I would put it squarely on strong guidance. And then if we see Karp on the earnings call saying,
what do the numbers actually mean? Obviously, on the face of them, they're strong, and even curiously strong. I believe, that Palantir's numbers are a lagging indicator of several macro trends that we got right. First is the obvious macro trend that is almost become a banality, that the world is becoming a software world. And the institutions that survive and thrive and provide benefits to their citizens, both in terms of actual output, but also real output, meaning output that includes data protection, that makes sure that the data is actually preserved in a way that guarantees its veracity, that gives comfort to its citizens, that make sure the citizens aren't merely a product to be monetized. And second, that as diverse as the institutions are that we work in, from clandestine services to providing AI in the most sensitive military contexts, to working with oil and gas companies, to airlines, to pharmaceutical research, to all aspects of helping to ameliorate the plague that is COVID. There's one trend: institutions, countries, individuals that can assess the value of software that can work now are the institutions that survive and provide value both in the government, commercial, and even moral context. Welcome to my barn. Our best decisions in the history of Palantir were made in this barn.
That's all the analysts need to hear. But really, I think I'm being quite conservative with my estimates. I'll make a follow-up video before the earnings report in May. And yes, we don't know the exact date yet, but I'll come back with some updated figures. So please let me know how I can improve my estimates. I want to hear from you. Some of these are just guesses on my end. I want to know what you think. Are you more bullish or bearish than I am? Let's try and get as close as we can to the actual PLTR results. So I hope you appreciated this breakdown. Subscribe for more. Until next time.